Okay, let's be honest. That's what the not is in there for. Okay, so the first thing you want to do is you want to look at it and go, it's got a not. So take the not out and answer the question. Figure out what it would look for if you were looking for it without the not. Say, okay, what are the gross income amounts for filing requirements for most taxpayers does include. Take the not out and just say, okay, so it does include. Well, wages, yeah. Well, tax exempt interest, probably not. So I don't know. So savings account interest, yeah. Unemployment compensation, yeah. So those are all yeses. So if you answer the question without the not, guess what? You got your 3 positive answers. Put the not back in, you know it's got to be
The negative.
the tax exempt interest. So remember, when you see these things, look for the stupid thing. Look for that not. Look for those always. Look for the what are they asking for? And I know sometimes it feels like, well, why did I learn that? It has nothing to do with taxes. Okay? It has nothing to do with anything that I've ever done, but it has to do with taking a test. And when you take the test, all of a sudden you're going, oh my God, it does work. You know, it's like, because when I was younger and I first learned these things, I thought they were pretty stupid too. And I then learned when I started to apply them, I go, oh my God, they really do work. You know, it's kind of like that saying, the older I get, the smarter my parents get. You know, it's very true, because those things that you learned, you heard from your parents, and you wanted to say were ridiculous, become awfully true when you get older. So let's get into it. Let's start with this. Did you guys have a good day yesterday? I know, Pam, you were moving. I'm so sorry. I know how much of a pain in the butt that is. Okay, I know. I hate moving. I mean, I just had a call with my the owner. Now, the owner of my house is a little bit different. The owner of my house is Kirkland Development. Kirkland Development is the actual development company doing the entire waterfront here for Vancouver and the buildings here. So when Dean Kirkland, who I actually have met several times and know Dean Kirkland, the actual owner of the development company, because I did real estate for years, he started out doing houses. So I rent this house, and I decided, this is about the right size for me, with Shell and I and the baby and mom occasionally here. This is about the perfect size. So I talked to him about buying the house because I don't want to move again. So I know how much of a pain that is. So I actually had a conference call with him, and we sat down, he and I and Shell and the property manager, and said, look, we want to make an offer on this, on the house itself, and see if we can work it out, because I just want to buy the house, because I don't want to ever go through that again.
I know, and we've got another move in the next couple of years, because my daughter just bought this house that we're moving into with her, and the plan is to
that going, and we are going to get together on this. So I will have a list for you, Beth, of people. Please, I'm going to just start giving it to you directly, and we'll work together on it.
Okay.
Because I know that my phone has been burning up with people, and I've also been starting to get one, because I actually do have an email set up for the tax school. I've got tax school at jhtax-oregon as well, which has been starting to get emails to it occasionally from people.
Okay, yeah, I got somebody that said, oh, I left an email last week, and I'm like, I don't have you on my list, but I didn't tell you that.
No, but that Abby, she has been, I think she burned up my phone this morning like 4 times. So if that was who it was, but I was in the middle of teaching, so I didn't get a chance. It's the one ending in 6332.
Yeah, and she had a bad connection, so she had to call back a couple times while I was talking to her.
Okay, what is she mean? Is it the LTP class she's interested in? Okay, good. Well, we don't want to go into the juggle on that one right now. Well, we're this resume recording. We are good to go. Okay, ladies, start. What are the main filing statuses we have?
Head of household.
Run me off a list here. Head of household.
filing separate, head of household, qualifying widower with dependent child, single.
Single. Which one do we always see? We see single, we see married filing jointly, we see head of household. Pretty much those are the three big ones. We throw the qualifying widower, and we see the single one. I mean, we see the married filing separately occasionally. But really, do you ever really want to file married filing separately? Honestly?
Married filing screwed.
There you go. That's what it is. You pretty much want to avoid it. What is the main advantage of marrying filing jointly versus separately?
Can't get all the cool credits.
Can't get all the cool credits. And that applies to all the federal ones and even the Oregon ones. Okay? It divides everything up, and you end up with a problem. So when you're advising your customers, remember, it is not beneficial to actually file separately, no matter what. If you can, and even if you can, when you're talking to your people, think about it. You do not want them to file married filing separately in any way if you can avoid it. And the reason is they will basically be losing out no matter what. Okay? All right. Let's go on here. Okay. First, determine their marital status. And by marital status, that means actually know, are they really married? Not just do they say they're married. Okay, so that means they have legally filed a marriage. And that means a same-sex marriage, a heterosexual marriage, a normal marriage, or if they are just a civil union, because those are really, they're different. Remember it. A civil union is different than, the domestic partnership is different than being legally married, because that's really important. Living together, even if they've been living together since the beginning of time, does not count. Okay, there are several states that it does consider a civil union where that they are legally married after 7 years, but there's very few states, and we are not part of it. Okay, Oregon is not a legally married after 7 years or anything like that. Okay, just remember that. Once you have determined what their marriage status is, then what you have to determine is what they are, what your filing status that you're going to use. And how do you determine that? Go back here. It should be on this other slide. Hang on 1 second here. There we go. Now we got it.
Uh-oh.
That's better. It wasn't coming up here. From first slide. There we go. Now it's in the presenter mode. Much, much better. Okay. So I will share this one more time again. Sorry about that, ladies. My computer decided to switch screens on me. Now it should be back up. Okay. So first off, now that we've decided, are they married? And that means legally married. Now we need to decide their filing status. What normally decides their filing status?
If they're married or not.
No. We've decided if they're married already. But what now decides their filing status? What is normally their determining factor? Once you're married, you've now got husband and wife. What do you got after that one?
Babies.
Babies. Do you have a dependent? Very first question. Once you've got their filing status, do they have babies? Because at that point, do they have any dependents? That's the very first thing that comes to mind. Do you have a dependent? Okay? Because that is the very next thing will determine if you are filing with a dependent, if you if you have first married, divorced, widower, whatever, that's your married, then do you have babies? Okay? Dependents, somebody living with you, somebody you're taking care of, okay? A relative. And once you've decided that, that will determine your filing status. Okay? Now, what will happen to determine if a person is single? All right? The biggest thing is, what were they December 31st? December 31st will determine what they were for the whole tax year. It doesn't matter what they were on January 1st. It doesn't matter what they were on January 15th, March 15th, doesn't matter, okay? If they are married during that year, they are considered married for that entire year. Okay? If they are officially divorced for that anytime during that year, they are officially divorced for that entire year. Okay? So, if they have been married, if they are divorced, if they had their marriage annulled, if they are legally separated from their spouse. Now, that is the important word there. Catch that word? Legally separated. Not separated, legally separated. That's an important distinction. And the other most important one, and it's the saddest one, when you hear this story, you will want to cry. And that is if somebody passed away during that year. Because it will tear your heart out. In all honesty, it really will. Because if they lost their husband or wife, sometimes it's the very first year they've had to do taxes themselves. And it will tear your heart out when you're sitting there going, I've never had to do taxes before. My wife did it all along, and it's the husband coming in, and she passed away from cancer this year. That will tear your heart out. But that is if they were any time during that year, and those are the only special occasions. If they passed away in the previous year, remember, widow carries over for 2 years. Okay? Goes for 2 years. All right. Next one. If they are married on December 31st, they are married for the entire year. Okay? Common law marriage is only recognized in a couple of states, but if it is recognized by that state, if that 7-year date falls even on December 31st, guess what? They are legally married. Okay? So common law marriage is very rare now. There are very few states that recognize it. But if there are, and I think there's only like 7 of them that do it, then yes, they are. My dad's been together with Kathy. That's what I call her. I don't call her my stepmom or anything like that. She's Kathy. If my dad, even though they've been together for now, I think it is 29 years, okay, they are not married. All right? But common law marriages are very rare. If it happens, they are married. All right. Run through a fast quiz here, guys. Carl and Cindy were married on December 31st of the tax year. Which of the following statements describes their marital status for filing purposes? Because they were not married for most of the tax year, they are considered single. Think that one's true? I don't think so. Because they did not live together during the year, they are considered single. Nope. Okay, because they were married at the end of the year, they are considered married. That sounds like a probability to me. They can choose whether to be considered married or single. Guys, that is not a choice. Okay? They can choose whether or not they get married, but they can't choose once they've done it. So, by elimination, because they were married on December 31st at the end of the year, they are considered married. Plain and simple. Jose's wife, Juanita, died on June 19 of the tax year. He is not remarried. Which of the following describes Juan's marital status for filing status purposes? Single? Married? Unmarried? Legally separated? Ideas? We know he's not single.
Married.
Married. So what he is technically there, married. Thank you. Because no matter what, he is married. Okay? He is a widow, but he is married for tax purposes. Under which circumstance is Katie considered married for filing purposes? She was single at the end of the tax year, but was married when she filed her tax returns. Doesn't work. Okay, you can't get retroactively married. Just saying. Her divorce became final on December 3rd of her tax year. She's divorced, guys. She is not divorced, but is legally separated from her husband. That's the key word there. Legally separated. She is not divorced or legally separated from her husband, but has not seen or talked to him for 15 years. I hate to tell you, she has not seen or talked to him for 15 years. I don't care if she, gets his mail still. Okay, guess what? They are still married. So she is not divorced or legally separated. They are still married. All right. He may even be presumed dead, but you know what? They are still legally married. Okay, taxpayers who are married can choose to file a tax return that reports their combined income and deductions on one tax return, filing jointly. When they make this choice, their filing status is married filing jointly. Okay. When filing jointly, fill out the 1040 as followed. Filing status, filing jointly, and in the personal information section, you have to enter both the taxpayer's information, their social security number, and their address, even if they are living separately. Okay? Remember that. It's very important because if they are legally married, when Shell and I first got married, she was still in Dubai and then in the Philippines. So guess what address she had to technically use? She had to use Manila, Pasig. God, I can still, she lived there all that time. I still can't say it. I was even married there. I still can't say Pasig right. So anyways, okay, so yes. Okay, married filing stupid is a filing status. You know, it's like married filing separately is a filing status available for married taxpayers who either choose to file separate returns and or cannot agree to file their returns jointly. Guys, get them to agree to it, okay? Let's be honest. If they don't agree to it, that is going to cost them so much that it is simply not worth it. All right? Talk to them. Tell them, look, I know you guys hate each other. I know you guys can't be in the same room without wanting to shoot each other. But honestly, let's work it out for the taxes. Okay? It works out best for you, your kids, and everybody else. But if they cannot,
entrance pass form.
there you go. But if there is, for whatever reason, they will not do it, and you have to file married filing stupid, guess what? There are some things that are different on it. Married filing taxpayers who file separate assume the tax, interest, and penalty for items on their return only. And the hardest part is when you're doing this, you have to divide everything that's based on them versus based on what the other person has. And sometimes that's really hard to make that distinction. If one spouse chooses not to file a joint return, guess what? One does it, both get to do it. You can't have one person filing jointly and one person filing separately. And guess what happens when one of them decides to do it and file? Oops. The IRS system automatically kicks them out. Because what will happen is you will file jointly thinking, oh, great, we're filing, and he's not here, but we're filing jointly. And for whatever reason, I don't know how they would get it through, but it has happened that somebody at another place, for whatever reason, we've had rejections where somebody filed jointly and our customer was filing separately, and guess what? It got rejected because the other husband or wife filed jointly. And it went into the system and the IRS rejected it. So if one is filing separately, both have to file separately. Okay, this is the most true statement ever. Filing married filing separately is usually, and there is no usually, it is always. That's one of those absolute things that is true. Okay, it is always less advantage than marrying filing jointly. All right, next one. So Andrew and Karen's divorce was finalized November 30th of the tax year. Which filing status do they qualify to use? Married filing jointly? Married filing separately? Either married filing jointly or silent jointly or separately, or neither?
Neither.
Neither.
Yeah.
They're divorced. I know it sucks, but oh, by the way, Vicky, did you get a chance to get a hold of Yolanda?
No, she's out at a meeting. I was talking to her a little earlier.
Okay, just checking because I want to see if she can get on it.
She's gonna watch the videos.
Okay, because I've been posting them. They are on there. So
yeah, I did see them.
Okay, so
The
neither.
EAs aren't though. Sorry.
What's that?
The EA second
Yeah, I
class
saw the
EA.
EA2 is not. Yeah, I've got to get them back up because the playlist went away. So
Okay,
so
thank you.
neither. All right. James and Clara were married 5 years ago. They have lived apart since last year, but are not divorced or legally separated. Which do they qualify? Married filing jointly, married filing separately, either or neither.
But are not divorced or legally separated. Married filing separately, married filing jointly. Depending if they have kids.
So so we know they're married. They have lived, but they've lived apart.
More than 6 months out of the year.
Yep. So they can do which one? We know they're married, so it could be a married. So let's look at it this way. Let's look at this with the test-taking skills. All right, we've got to vote for number 3. So we know, based on this, they were married 5 years ago. Let's look at the facts. They were married 5 years ago. They have lived apart since last year, but are not divorced or legally separated. So guess what? Technically, they are married.
Yeah.
Technically, they are married. So that would make this one true. That would make this one true. So we know automatically it can't, we can't have 2 true answers, right? Unless it says either one. So guess what it's got to be? Got to be number 3. Okay?
Yeah.
It's got to be either. All right. Ben died on November 29th of the tax year. His wife, Marie, has not remarried. Which filing status does Marie qualify to use? Married filing jointly, married filing separately, either or neither?
Married filing jointly.
Okay, she qualifies for that. Can she file married filing separately too?
Yes.
Okay, so she can do either one of those. So she can do either jointly or separately.
Why would she?
Why would she ever want to do it? Who knows? Maybe he had tax issues and he could have been a jerk and have all kinds of debt. Who knows?
Question for you.
What's that?
The previous question, they lived apart over 6 months out of the year.
Doesn't matter.
If they had, but aren't they allowed, if they had kids, she was allowed head of household?
That does not make a difference, though. For them, there is no kids or anything there.
Okay.
Remember, the rule number 1 is follow the facts in the question. Okay, we want to read too much into it, and you immediately, that's what we start doing. Okay, we start wanting, I know, I do it too. I want to start reading, well, what about this?
What if they had kids?
What if they had kids? What if they had, do you know how many other filing statuses? What if, they were married 5 years ago? What if he died and she doesn't know it?
Yep.
It's like they've lived separately. Great. What if he's dead, and she just hasn't found out yet? Guess what? That changes her status entirely. What if he's hooking up with somebody and actually is now, So.
Married 2 people.
Exactly. So this one, she can use either. All right, head of household. This one, guys, I hate to tell you, as much as it sounds really cool, is unfortunately one of the most complicated ones there is, because when you file with this tax status, unfortunately, it gets criticized and checked by the IRS on so many levels. Okay, head of household. Okay. With the head of household, the general requirements are all of the following. Okay. Have a qualifying person that lived with you for more than half of the year. Now that is except for parents. Parents are a little bit different. Okay. They actually qualify under a different category. You provide more than half of the cost of upkeep of the home for a qualifying person. So in other words, you're paying the heat, the rent, the food, the cost of cleaning the bathrooms, the maid service, you name it, whatever it may be. Okay? You are doing it. All right? Let's see here. I got this. There we go. You are unmarried or considered unmarried. That is what the person must be. Now, that one is really hard because the person may be disabled. And in that case, there are certain exceptions, but don't worry about that. They must be unmarried or considered unmarried. And that's the important part. Do this. There we go. Now, unmarried requirements. Okay. Not married and one of the following. You claim them on your tax return as a qualifying child or any variation of your child, except divorced or separated parents. The claim is not required. Now, this is where it gets a little complicated. Now, the wording on this, too, is a little bit strange. Okay, because if we go back here and look at this, okay, and we start considering this, they have a qualifying person. Now, it doesn't necessarily a child that lived with you. Okay, so when we say person, we are not talking about just necessarily somebody under 17 or under 18. We are talking about somebody who qualifies to live with you. Okay, parents are an exception, and they can qualify with special requirements. We'll go over that. But they have to have lived with you for more than half the year. You provided their upkeep, and they are unmarried or considered unmarried. The unmarried requirements, now that's a little more complicated, okay? Because in some cases, they're disabled, even if they're still married, okay? And they just can't take care of themselves anymore. This happens a lot of times when you have an elderly person. They may still very well be married, but no longer able to take care of themselves, okay? We don't need to get into that into too much detail. Let's be honest. When we're taking this test, you have 200 questions. There are only so many questions they're going to ask you in this particular area, okay? So let's not get too wrapped up into it, but not married literally means they are either not married and they basically need to be claimed as a qualifying child or basically something along that line on your tax return. You have to show that they are disabled or something of your dependent, okay? Now, they get claimed on your tax return as a qualifying relative. Now, there are some important things on this, because what are the qualifying relatives? Child, sibling, parent, in-laws, or descendant from them. Or an aunt and an uncle, which makes no sense because that should be basically considered like your in-laws anyways. But, or an aunt and an uncle. Okay, so your cousins qualify because it says or a descendant from them.
I didn't think cousins qualified for anything.
Huh?
I didn't think cousins qualified for anything.
Well, it all depends on where you read that or descendants they're from. When you start testing it, depends upon what their condition is, if they're disabled. And it depends on where they, because aunt and uncle, because that is their dependent. That is their descendant. Okay, so we have to go through the list in detail. See, it's where that or descendants from, or aunt and uncle. Okay, so I got to double check on that because you see, I think this is actually written backwards because I have known cases that cousins actually do qualify. And I got to double check on that. Okay, that's why I wasn't sure on this one. Because when I read it, James put this particular slide together when he was doing it for the original class, but I cannot remember. But because I do have some people who parents do, cousins do qualify. Usually blood cousins, not marital cousins, but blood cousins. So here's the one thing that's really neat too. There's also another category for qualifying relatives, and that's foster child. Okay, foster children and adopted children are your children. Okay, so they do qualify. Now, considered unmarried requirements. Unmarried is filing separately from spouse and not live with the spouse for the last half of the year. That's the important part. In other words, that they are not eligible to be together with the spouse, basically. This happens with the elderly individuals who can no longer take care of themselves. Okay. So considered unmarried is filing separately from their spouse and not live with the spouse for the last half of the year. So in other words, that person who's now technically disabled or, you know, cannot actually care for themselves, and for the last half of the year, that's important, it's the last half of the year. Okay, that's really important, because if it was for the first half of the year, it will not qualify. Okay. And you provide more than half the cost of upkeep for yourself and the qualifying person. Way too much on there. Okay. This is the cost of upkeep of the home. These are the things that count: food, rent, utility, repairs, property insurance, other household expenses, property taxes, mortgage, pretty much what it costs for the house. Straightforward. It's not that hard, guys. What are the costs of a house? Okay, your rent, your mortgage, whatever it may be, the utilities, the repairs, the property insurance, food, those are normal costs of upkeep for a home. If you provided more than half of it, that means you covered it. Okay, now here's an important fact for you. As a tax preparer, you have a certain level of due diligence that you have to maintain. Due diligence is your responsibility to make sure that the information is legitimate. Okay, and this is mainly true with head of household. And this will come into with, did you live with me did they live with you for the over half of the year and for the last half of the year? Okay, that's really important. That is your due diligence to double check that they really did, because it turns out they lived with them for like 2 months. Okay, what will end up happening if this person actually lived with them for about 2 months and lived with the other brother for like 8 months? What's going to happen?
Gonna get caught.
Well, they get caught, but more importantly, what's going to happen on the 2 tax returns? You know very well that brother that they lived with for 8 months is probably going to claim them too. So what's going to happen? It's going to go into the IRS. There you go, Pam. You got it.
Rejected.
The IRS is going to get them both, and the first thing that's going to happen is it's going to kick out both returns.
Mm-hmm.
And you're going to be confronted to that. Well, guess what? Somebody, I can't remember the exact wording, this individual has the qualifying relative has been claimed on 2 tax returns, however it comes out. I can't remember the exact wording, but it was rejected due to. So make sure in your due diligence that the person actually lived with them for over half the year, that they're the primary person that they lived with, because that's the biggest thing. Brother and sister, turns out they didn't actually live with them. Okay, you know, next thing you know, they didn't live with them. They can't claim them for head of household, and as a result, they're in a world of hurt. Okay, next one is the actual cost of expenses. If it turns out you had the mom move in with you because the mom actually still has some cash in her accounts, and she just can't get around very well, so you had her move in with you so she could cover half of your bills. That isn't you providing over half of the expenses. Okay, so please remember that. In your due diligence, double check that they actually did provide over half of the upkeep for the home for them. Okay, and that's your due diligence. Okay, check the relationship, the living arrangements, the marital status, the amount of time that they lived with him, and the amount of support that they provided. Okay? That is part of your due diligence. And the most important thing is in Profiler, what would you do?
Notes.
Note it. Just put it in there. Okay, it's really easy. It's not that hard to do. Note Profiler, please.
Do you put
Okay.
that in the question that you ask and then the notes like we're supposed to do? Because I just think that would take me 5,000 years if I.
There are a series of questions in there that will do for your due diligence. It will just ask you, was this true? Was this true? Was this true? But if there's anything that
No, yeah, but I mean that's the law. We are supposed to ask extra questions and supposed
Yes.
to
Right.
and the answer.
Yes.
And
Yeah.
usually
And that's
taxpayer said da 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 da. Always put in my question because I think that the statement is obvious what the question was.
right.
But I mean, I don't know. That's still not right, right?
Right.
Okay.
You do want to put your, let's put it this way. It is better to, and this is part of the exam because it does ask you due diligence questions. Okay. One of the important parts, especially with Oregon, they are sticklers on this, is due diligence.
Right.
Okay. It's very important to the state. So please understand something.
Mm-hmm.
It is better to note 10 pages and go overboard than have not noted something.
Right. And I've done much better at it since I got that letter saying, you know, you could be doing whatever wrong just because I did 400 tax returns and a lot of them had EIC in it. But it's very, very time consuming because I ask a lot of questions and
exactly. And here's my problem.
Answers.
I blow through tax returns, and I can do, honestly, if I had to, I can do tax returns in 15 minutes if I really scream through them. I've done them for so long.
Mining included, yeah, absolutely, me too.
You know, so I can scream through them that fast if I need to. And if I've got a whole lobby full of people, guess what? I'm going to blow through them as fast as needed, right? The problem is we're really not doing our job at that point. What they want is they want certain things, because what happens later on when it turns out we were blowing through those 25 people that were sitting in the lobby, and it turns out 2 of them were basically lying their butt off.
Is there an easier way?
Is there an easier way?
Is there?
There is, in a sense, and I'm going to try to help us with it.
That would be great.
What it is, we have, I'm going to create a couple of what are basically profiler templates.
Mm-hmm.
It will have a series of really simple kind of check boxes, more so than whole questions. So you can go right through it really fast with the common questions and just kind of like check yes or no kind of thing, or check if they had dependents, how many they had, that sort of thing, really fast. So at least you can show that you did ask some questions.
Oh, perfect.
And what will happen is Profiler doesn't actually work that way, but what I can do is on the side, it'll be a template on the document, and all you're going to do is copy and paste it into Profiler.
Cool. Okay.
So it won't be perfect, but it'll be a sure sight better than not. So will it be perfect? No, but it'll try. I'm trying to make it simpler for you.
Because I know a lot of us who ask a lot of questions, some of us aren't super fast at typing, and
No, I can type, but when I'm asking questions, it's hard to type and ask questions at the same time. So what I'd rather do is I'd rather have just a series of really simple questions that I know are the general questions, at least, so I at least get that information, so it's something, so it's all the common things. And what you're going to do is then just copy and paste it into Profiler, and at least it'll be the basic things so that we're not stuck with nothing. And I'm going to try to make it as easy as possible that way.
That's exciting.
That's one of my to-do list. You know, having done this for way too many years, I know how hard that is. Okay. So we are, because the very next thing is, like it says, The Tax Cuts and Job Acts, it put penalties on every failure of a tax preparer who fails to comply with the due diligence requirements. It's not fun. Okay, it is not fun to get that letter saying, you did not comply with this.
Mine said you may not have complied.
Yeah, there you go. I've seen the letter. I've had a couple of tax preparers who have gotten it. I haven't gotten one, thank God, but I'm surprised actually I haven't with the number of them that I've blown through, I'll be honest. So and I don't intend to blow through them. I do ask the questions. That's just it. A lot of times I have asked the questions, but I didn't get a chance to note it.
Yeah, so, or you don't ask the questions. You're the starting preparer, and the person who finishes it up doesn't.
Is different, right? They didn't ask the questions. They assume something like maybe they did ask the questions. So right. I'm going to try to make it as easy as possible for you.
Oh, yay.
Okay. I can't make it perfect, but I can try to make it a whole lot better than it is.
Yay.
Okay. So that's one of my, on this to-do list that is like 75 pages long. Okay. That's in there. So all right. So yes.
Scan it into the tax return.
That's kind of what I'm trying to do in a sense, but it's really not. It won't work just as a scan thing. That actually may be one alternative in a sense. For some people, it may be easier. That what I'll do is I'll have a due diligence sheet that you can just quick check it off on the sheet and just scan it in. That is, thank you, Pam. That's actually a very good idea in that sense that I hadn't.
I think so. Got to scan the other stuff. Scan that too.
Because once it's scanned in, it still counts. But see, in Profiler, what I was going to do is we do have text documents we basically use on the program.
Yeah.
And I can put a template on them that you just flash through it, ask the questions, or do whatever, and just check the boxes you go through. And then you just basically just do Control A, it selects it all, Control C, it copies it, and to just Control V, and it pastes it right into Profiler for you. Okay, and I may even try to figure out a way to automate that. But
tech savvy people, that'll be great. But people who aren't so tech savvy, that might be good.
That might be better. As Pam's way is actually also have it for those people who aren't tech savvy, to have it as a document. They can just check them then right on the document and just say, okay, due diligence, and scan it right into the thing, and it's scanned right into the form.
Yeah.
So thank you, Pam. That
would be easiest for me.
We had a sheet.
See, I may just give it to you. I'll just give it to you both ways. So whichever is more convenient for you, either put it right into the document as part of Profiler's notes, or scan it into the document as part of the thing. Scanned version of due diligence for Profiler. So thank you, Pam. That is a very good suggestion. So I can use the same basic one for both of them. So, like I said, I'm trying to make it as easy as possible for you guys, and so it's not hard for you guys. So Tom is divorced. He paid more than half the cost of keeping up his home. His daughter, Susan, 5, lived with him for 8 months during the year. Tim is allowing Susan's mother to claim her as a dependent. Can Tim use head of household as his filing status? Now, what are the important facts? He's divorced, husband and wife. They're divorced now, so they're divorced. He paid more than half the cost of the upkeep of his home. He's got that. It's his daughter, so he's got the relationship. She's under that, so he lived with him for 8 months, so she's got him for that over half a year, so he supported her. So Tim is allowing her. Here's the question. Tim is allowing Susan's mother to claim her as a dependent. Can he still use head of household as his filing status?
Not unless he has another dependent.
No. He's got her with it and all that. He doesn't need to claim her as a dependent. That's his child. He actually has that ability. So yes, he can still claim her for head of household. Okay. She is allowed to, by law, The dependency is separate
Oh, I'm
because
thinking of the
it's
exemptions still.
Yep. So this is the one kind of thing, remember, because this is children, she has a right to claim the child in certain years and things like that based on the divorce. So that's kind of thrown in there to throw you off. All right, so this is like reading a book. Samuel and Bridget are married and live together with their son, Mitchell, 9, until Samuel moved out in November 17th of the tax year. Now, Bridget paid 100% of the cost of the upkeep of the home for herself and Mitchell. She also provided 100% of Mitchell's support after Samuel moved out. Samuel and Bridget are not divorced or legally separated. What are they? They are filing separate returns. Can Bridget use head of household as their filing status?
No.
Okay. Why is your behind your answer?
They didn't live apart the last 6 months out of the year.
Thank you. Thank you. No, they did not. So, no. Okay. Vivienne is divorced. Her son, Claude, 25, lived with her all year. Vivienne paid all the cost of upkeep on the home and supported Claude. Claude is not her qualifying child or dependent. Can Vivienne use head of household as her filing status? No, he's 25.
Nope.
Is that eliminated? Yeah, she paid for the cost of upkeep and supporting Claude. Is he too old?
I don't know. Is there an age qualification with head of household? I don't think there is there?
Nope. That's thrown in there basically just as a number, so.
I guess.
But here's the thing. Claude is not Vivienne's qualifying child dependent. So probably not just based on that. If I was to guess, if I was to read this, okay, and just reading it, think about this. Of all the statements in here, what's the most important thing when you think about head of household? Qualifying child or dependent, right?
Not either one of those, so you need one of those.
Yep, so it's saying Claude is not Vivienne's qualifying child or dependent. That's pretty much saying to me, this cannot be possibly her, she can't claim him in that sense. So, no, it's not.
Yep.
But this would be the key to me. Claude is not Vivienne's qualifying child or dependent. Of all the statements in here, even if I didn't know the answer, I would say this, Claude is not her qualifying child or dependent. Just guessing. That would lead me to just guess no. Okay. All right. Kim is single. She's 31. Her boyfriend, John, 28, and his son, Chase. Who names their child Chase? I'm sorry. But anyways, 4. Lived with her all year. Kim paid more than half the cost of keeping up the home and supported John and Chase. She can claim them both as dependents. Can she use the head of household as her filing status? Now, what's the important thing about it? What do we have here? What are the important parts of, they live together for more than half a year. She made the payments, because it says that.
You can claim them as both as dependent.
Uh-huh.
They're not related.
They're not related. So.
You're not blood.
So. What is this key word here? Her boyfriend, John.
And his son, not their son.
Nope. And his son. So guess what?
Lo siento.
Nada. That's the important. That's the important part.
But what's that sentence there? It says she can claim them both as dependents.
Uh-huh. You may be able to.
Do we still care about that? I mean,
not necessarily. No. Remember, they're going to throw things in here to do what to you?
2017 and before thing.
Mm-hmm. They're going to put things in here to try to make it confusing.
Ugh, mission accomplished.
Remember the facts. What's head of household? What are the requirements? If we go back to the chart, are they married? What's their relationship? Okay. What is there? You have a relationship test. You have a support test. You have the residency test, right?
Mm-hmm.
Those are the three main tests. Okay. Dependency is really not in that sense in the test, is it?
Mm-mm.
So if we ask for our questions, what is their relationship? Nothing.
Yeah.
They're a boyfriend. Okay. They failed that test. They got the residency test. Did they live together? Oh yeah, they lived together all year. The support test? Yep, she paid more than half the cost of the upkeep of the home. Great. So we got the support test, the residency test. Now let's think about this. What is their relationship test? Are they married? Are they a qualifying relative? Guess what? They failed that test. So you got to think about it in those terms. Don't look at, remember, I know that this is sometimes hard because you want to read everything in the test and you want to assume that every part of every question is part of the test, part of the question. It's when a lawyer has a fact that they know will help the other side, you know what they do with it?
Not say it.
No, they have to say it. There has to be 100% disclosure. Remember that. That's very important. Not saying it can immediately allow the other side to appeal it once it's found. And guess what? They immediately lose, and they can lose their license if they knew about it.
Then they turn it into a positive for their side.
So what do you do instead? You bury it. You take this ton of useless information and you take the one fact that you know can hurt you and you stick it in someplace where hopefully they never find it, because it's so bad and you don't want them to learn that one fact. So you give them so much garbage that, guess what? They don't find the one little diamond that's stuck in there, because they got to take the time to look for it. So think about this. Do their ages matter? You got ages in there. Kim is single. That's important, isn't it? Nope. Okay. Right?
Well, for head of household, it would.
Huh?
For head of household, it would.
It would, in a sense, yes. But
married, and then her boyfriend lived with them, then.
Yeah, but if she's married and her boyfriend lived with them, that would be interesting, wouldn't it?
But
anyways, but when it comes down to it, what are the things here? So you start throwing stuff in there to bury the fact. So the answer is no. Okay. So Lincoln and Sasha are married but have not lived together for 2 years. Their daughter, Inita, lived with Lincoln all year, and Lincoln provided more than half the cost of keeping up their home. Lincoln and Sasha are not divorced or legally separated. They are filing separate returns. Can Lincoln use head of household as his filing status? Okay, let's think about this. Are they married?
Mm-hmm.
Okay. Does it matter that they're not living together?
Maybe.
No, not that they're not. What matters is their daughter, Inita, lived with Lincoln all year. It doesn't matter that they haven't lived together. We know that they're married. Doesn't matter if one's living in China and one's living in who cares where. Okay? They're married. They are not legally separated and not divorced. Great. Okay, we could have gotten that from this statement. They threw this in here. Legally are not divorced, legally separated. It says right here. They've actually repeated themselves. They are married but have not lived together for 2 years. But then they even throw in here, they are not divorced or legally separated. They more or less said that up here. Okay, so they threw in extra stuff that doesn't matter.
But they didn't live together for 2 years.
Doesn't make a difference. Their daughter, they're still married. They're still married. They can file married filing separately. But he can file head of household because it's his daughter.
Right, and he's considered unmarried because he wasn't living with her for the past 6 months.
There you go. So they are separate. They are. He can claim her as head of household. The answer is yes. He can claim her as head of household. Not Sasha, but Inita. Okay. He can't claim Sasha for head of household, but his daughter, he can. The 14-year-old. Okay. So that's the important thing. Read, I know it's stupid, but read that, just like follow the rules, follow the checklist. Relationship, residency, support. That is so hard sometimes because you want to go, well, they didn't live together or whatever. The parents didn't live together, but he and his daughter did.
Right. But when I see that, I see married but have not lived together the last 2 years, I automatically think, ooh, somebody might be able to claim head of household.
Yeah. Yeah.
And then move on to, do they have a kid? Yes, they do have a kid.
Yes, they do.
Somebody has a kid.
So that's kind of what happened is in this case, you immediately kick into, oh, wait a minute. No, they're not married. They're separate. No, what? And then they throw in they're not divorced or legally separated. So when it comes down to it, even though they are not living together, they would file married filing separately. But in his case, he is filing head of household because he has her. Okay. So I know that sometimes sounds, it's kind of like putting a great big jigsaw puzzle together. Okay. Now, qualifying widower with a dependent child. This one is a little bit different. What's that?
I hate this one.
Yeah.
This is me.
Honestly, me too. Qualifying widower to start. That one's always hard because number one, somebody passed away. Okay, so number one, it's going to tear at your heartstrings. Number two, it is a person with a dependent child. This means you now have a single parent. Okay, with a parent who passed away. This is a whole lot different, by the way, than the single parent with a person who's not paying child support living 2 states away. Okay, that's a divorced parent. This is the one that the parent passed away for whatever reason. You know, I know of one who she was killed in a car accident, and he's got the 2 daughters, and he takes care of them the best he can. He tries to be the best father he possibly can, and it's like it tears at your heart, man, when you see these things. So think about it. This one, honestly, when you have this situation, take the extra minute with them. I don't care how long it takes to do this tax return. I don't care if they say do a tax return in an hour. I don't care if this takes you 5 hours to do, honestly, because this one, that person is usually struggling and doing the best they can, and God help them. I hope, that they have every family member supporting them, because that is the hardest thing. Not only are they going through a loss, but usually they have children, because to be a qualifying widower, they have to have died within the past 2 years. Okay. So the qualifying widower filing status qualifies the taxpayer to use the same tax rate and standard deductions as married filing jointly. And this means that person has passed away within that 2-year period. And that really hurts. So take your time with them. Okay. So qualifying widower status, if all of the following is met. They're entitled to file a joint return for the year of death. Their spouse died in one of the 2 previous tax years, and they did not marry again by tax year's end. So they are a single person. So they are still a widower. And they've had that loss within that 2-year period. Okay? Their taxpayers, the taxpayer's son or daughter or stepchild lived with them all year, or the child or stepchild, or the taxpayer has a child or stepchild who they could claim as a dependent, except not a foster child, except that the child had a gross income of $4,150 or more. This is for 2018. The child filed a joint return, or the taxpayer could be claimed as a dependent on someone else's return. These are the only exceptions, okay? If one of these occurred, they cannot claim this status, okay? Or the taxpayer paid more than half the cost of, the taxpayer had to have paid more than half the cost of upkeep for the home and their qualifying dependent for the entire year. Okay, so it has the status of the death of their partner within 2 years. Okay. They have a child with them, or a child that they can claim who did not have a gross income of $4,150 or more, or did not file a joint return, or the taxpayer could not be claimed as a dependent on someone else's return. So if they were, they are 18 years old themselves and had a child and something happened, maybe they were in a car accident and one of the 2 parents were killed, who knows? And they now have a dependent child themselves, but they can still be claimed on somebody else's tax return. Okay? So those are the conditions. Now, those are pretty tough conditions, and they are ones that if you are ever in this situation, do not try to remember these conditions. Okay? Or remember we were talking about, what do you take to the test with you?
Cheat sheet.
Cheat sheet. Okay, so you're going to take a cheat sheet to the test, right?
Ugh.
Would this be something you would want to
Yes.
have in a little thing on the cheat sheet?
Yes.
I would suggest this as a thing you would put briefly on the cheat sheet. Okay? This is not something you're going to want. Yeah.
For the consultants, we're not allowed to take anything into the room with us.
Yes, we know
No,
that.
but you better read it before.
You didn't go through my test taking thing. Go through my test taking thing and we'll talk.
Okay.
Okay.
Like, what?
Yeah, because take the cheat sheet and put this on your cheat sheet, because this is really important. This is one of those things that's your 10-minute thing beforehand, because this is important. Head of household status is on the test. Okay? Learning the head of household status, knowing the head of household status is on the test. So this would be something you would want to definitely have on your cheat sheet. Okay? Everybody got their notes from it?
Yep.
All right. I know Beth is on the phone, but we got to keep going here. Okay. Filing single. Okay. This is pretty simple. They're single. Is the taxpayer single? Okay. They are not married and do not qualify for either a head of household or a qualifying widow filing status. Okay. They've never been married. They're divorced and do not qualify for the head of household or qualifying widow status. Okay, it's very important. Okay, that's when you're single. If you do qualify for any other status, you would be the other status, not single. You would not believe how many people want to mark somebody as single just because they think they're not married. Okay? So, how long can a taxpayer use the qualifying widower and dependent child as their filing status? For 5 years? Only the first year after the spouse dies? Up to 2 years after the year the spouse dies? Only the year in which the spouse dies. Okay,
Up to 2 years.
Up to 2 years. Now, this is one of those that's hard. The reason is, in this particular case, there is no way to cheat the test. Okay, there is no way I can really look at this and say, oh, well, I can do this, or I can start eliminating stuff. This is more or less you need to know the answer. You need to kind of know that it's a 2-year thing. Because you can't guess, oh, it's 5 years, only the first year after the spouse dies, or, you know, you have to know that it's 2 years. So there's not a simple way to guess that it's something else. Okay. So it is only up to 2 years after the year after the spouse dies. Okay. Herman's spouse died 3 years ago, and he has not remarried. He paid more than half the cost of keeping up his home, where he lives alone. He does not have any dependents. Which filing status would he use?
Single.
Oh, wow, that was fast. You got it, Pam. He's single. It's 3 years after. He's not a qualifying widow any longer. It's 3 years after it. Okay, he's no longer a qualifying widow. He is no longer a head of household. He's
no longer married.
He's no longer married. So he is single. Okay, Myra's spouse died 2 years ago, and she is not remarried. Myra paid more than half the cost of keeping up her home, and that was the main home for herself and her granddaughter, Helen. Myra can claim Helen as a dependent. Which filing status would Myra use? Married filing jointly. Nope. Married filing jointly. Why would she do that? She can't. He passed away. So married filing jointly or separately, we can pretty much eliminate that. Head of household, possibly, because that. Qualifying widower with a dependent child. Well, this is not her child. Remember, that's the thing. This is her granddaughter, not her child. So that's the thing. For a qualifying widow with a dependent child, we know it can't be that one then.
So it's only head of household.
So it's either head of household or, let's see, so head of household or qualifying widow. It wouldn't be qualifying widow because she's got a possibility she can claim head of household. So it's just head of household. Okay. All right. So a taxpayer may qualify for more than one filing status. Your job is to determine the most advantageous, I cannot speak today. Your job is to determine the most advantageous filing status available to him. So you want to figure out what is the best way to do it. Okay. So there's kind of a pecking order. So if they're single, here's the best ones. So if it's a single taxpayer, qualifying widow, if they can qualify as a qualifying widow, that is by far the best. Gets them every advantage. Okay, they get all the benefits of being married to both of them, even though the one has passed away. So qualifying widow. Head of household is next. Okay, if there's anybody in it who can be claimed as head of household. Then single. That's actually then the least advantageous if you're single. If you're married, you can be married filing jointly. That is the best one. Okay, that's the best status you can possibly get. Married filing jointly. Then you've got head of household. That would be next. Finally, you have the worst one, that's always the worst one, even though some people say it's the best, is married filing separately. Do not have any advantages. So that is the order for your filing status. And that is for both of them. So if you can go in those orders, those are the best one. Go to the next one, only if they don't qualify for that particular one. All right, so Bob's wife died 18 months ago, and he has not remarried. Okay? Bob paid more than half the cost of upkeep. That was a main home for himself and his stepdaughter, Valerie. Bob can claim Valerie as a dependent. Based on the tax rates, generally, what is the most advantageous filing status Bob qualifies to use? Married filing jointly. Bob's wife died 18 months ago.
Widower, yeah.
So we can eliminate the first two immediately. We don't want the married. Head of household, maybe, but why would you do that? Head of household, it's a widower. He's not single. It's his stepdaughter. Okay? The best one that he could possibly get is qualifying widower with a dependent child. That is his stepchild. You know, she passed away. And I don't know, I hate the word stepchild, but honestly, you know, I have a stepchild who passed away. The stepchild passed away. Passed away when he was 1.5. Okay? I actually never got to know him. But you know what? I have never known Russell as my stepchild. He's my son. Sorry, that's just the way it is. I hate the word stepchild. Makes me think of Cinderella. Okay?
Yeah.
There are no stepchildren. They're your kids. All right? Maybe that's a little weird of me, but that's just the way I feel. Okay? So, that one, qualifying widow. All right. All right, keep going. It's off there. There we go. Okay. Vincent and Cynthia are married but have not lived together for the last 2 years. Each of them paid more than half the cost of keeping up separate homes where they lived all year, each with their own qualifying children who they can claim as a dependent. Based on tax rate, generally, what is the most advantageous filing status they can
Head of
use?
household.
Okay, now think about
They
something.
both get head of household.
They both can have head of household, but remember something. What's better than head of household?
Married filing joint.
There you go.
If they'll do it.
If they will do it. The very best, that's the question. What is the best filing status they can use? They don't have to disagree. Maybe they're
Not a real life
even
situation like this, and head of household actually ended up being better.
yeah. So in truth, it's married filing jointly. If you can get them to do it. Now again, that's the big one. If you can get them to do it. Okay, sometimes that's really hard. Because talking them into that, pretty difficult sometimes. Okay, so that is pretty much everything for filing status. All right, that's not exactly the easiest thing to do. Talking them into getting together and going over stuff, definitely not easy. A lot of times they do not want to speak to each other. But, you know, hey, it's not always the most difficult thing. So, all right. Now, so that is what we have for that. I'm going to stop